Hi, welcome to our Why series, and this is our second video in the series. The question of why, what we are asking today, is why is profit and loss account and balance sheet important and how are they linked? Hi, I'm Saujanya and I coach corporate executives and business owners to understand and finance in the most practical way. We have started our Why series because we want to address the question of why we do what we do. This question is something which all the business unit heads and the controllers want their team to be clear when they are trying to do their jobs and activities as a part of their job profile. When we start getting an answer to the why, the other questions of what, when and how are also cleared. This helps the entire team to understand why they are doing whatever they are doing. Because if the why question is not answered, the cost implications can be very heavy in terms of productivity issues or proactiveness or lack of efficiency. Coming back to the topic, let's try and discuss why is profit and loss account and balance sheet so important. Let us begin in understanding the concept of profit and loss account. It can also be called as P&L account as an acronym. Profit and loss account is nothing but an excess of revenue over expenses. The excess of revenue over expenses is called as net income. In our earlier video series, we've also used a jargon which is used in this context. The revenue is also known as top line or the sales or the turnover, and the net income is also known as the bottom line, which is the jargon for top line and bottom line, which are popular. Coming to the balance sheet, and the acronym what we've used is BS, the balance sheet is something which is giving a financial position as on one particular day, and a profit and loss account is something which is giving the performance over a range of time frame, over a year or the period ending 12 months or the quarter ending or a half yearly ending, for a range of period. When we are trying to understand these two important components of financial statements, profit and loss account helps to understand the performance of the business, whereas balance sheet helps to understand the position of the assets and the liabilities. Here we would want to represent the financial position in an equation called as assets is equal to liabilities plus equity. Assets, as we've also discussed in our earlier videos, are nothing but application of funds. Liabilities plus equity are the sources of funds. Also, to understand better, liabilities are external sources of funds, equity are the internal sources of funds. This application of funds is always equal to source of funds, and this equation would tally after every transaction which the business undertakes. If these two components are very important in the financial statements, are they linked is the next question. We would say yes. Let's look at the first scenario where we can understand how these two are linked. Let's look at sales, which is nothing but the top line, and the receivables, which are also known as debtors. Sales are nothing but represented as a top line or on the profit and loss account, and debtors are the receivable where the entity has a right to receive the money from the customers because the entire sales transaction is on the accrual basis. So the first and foremost linkage which we can establish is sales and the debtors, or sales and the receivables. In order to assess the performance of the company or the business, it's very, very important to assess both the parameters together. For example, we can't look at only sales and understand the upward movement or the downward movement in comparison to the previous years or in comparison to a forecasted income statement. The movement of sales also has to be understood with the linkage to the movement of the receivables or the movement of the debtors. For all we know, the business can be making more credit sales, but if they are not very good in recovering the money from the customers, their profitability would be very high, but the liquidity of the business can be a questionable state. The business might be very good in terms of performance as per the profit and loss account, but do they have the liquid cash or the resources to pay for their operating expenses can be a question mark. So when we look at sales and debtors, one information gives us the information on profitability, and the other information can help us to give us patterns towards liquidity. This is one of the first areas of linking profit and loss account and balance sheet. Let's look at the second one. The second one would be nothing but expenses and creditors. As we understand, expenses are something which are presented in the profit and loss account. Sales over expenses is what we understand to give us a surplus. These expenses can be incurred on an accrual basis, where the business would have an obligation to pay to their creditors, or also called as vendors. They are also called as payables. And these creditors or vendor payments or payables are represented on the liability side of the balance sheet. Are these two linked? Yes, of course. If the expenses are incurred on an accrued basis, then they have to be represented as creditors until and unless the business completes their obligation by making a cash payment or a bank transfer. So until the business does not satisfy their obligation, it's presented on the liability side. If we have to understand the performance of a business, look at the expenses, not just the movement of expenses, but also the obligation in terms of how these expenses are settled. When are they settled? As we understood in our previous linkage, sales and expenses gives us information on the performance or the profitability. Debtors and creditors gives information on the working capital position or the short-term liquidity. If this linkage is interesting, let's go to the third one. The third one is called as retained earnings and shareholders' equity. Retained earnings are those earnings which are retained in the entity after dividends are appropriated. So the net income or the bottom line minus the dividend helps us to understand the earnings which are retained in the organization or the business, called as a retained earnings. This can be presented or is always presented on the liability side along with the shareholders' funds. So on the liability side, along with equity, share capital, it's presented as an addition to the capital under reserves and surplus or as a retained earnings. So it's a movement which impacts the shareholders' equity. Eventually, the profit and loss account data is presented in the balance sheet on the liability side under the head net worth, or also called as shareholders' equity or just equity. So the retained earnings and the shareholders' equity have a direct proportion. If there is an increase in retained earnings, obviously there's an increase in shareholders' equity. I hope this particular linkage was useful and you have intelligently understood how to link it. If you've liked this information, please do share this video for the others so that they can also be benefited. Let's take a recap before we end this video. Are we looking at the two most important components of the financial statements like profit and loss account and balance sheet? Yes. If they are looking to be very important components, can we understand that they are linked? Yes, they are linked. We try and understand the presentation format of the profit and loss account. The profit and loss account has the data presented as revenue minus expenses as net income, and the balance sheet will have the position of the assets and the liabilities and equity. The assets are sources of funds, which is always equal to, the assets are application of funds, which are always equal to the sources of funds, which are liabilities plus equity. The first linkage what we made was sales and debtors. Sales are nothing but the turnover, the revenue generated by the business, and debtors are the receivables the entity would present on the asset side. If the sales or turnover is made on the accrual basis, then the receivable is presented. Sales and debtors have to be understood linked together to understand the profitability and the liquidity of the business. Likewise, the second linkage would be expenses and the creditors. Expenses are all the amount of operating costs which the business incurs. If that operating expenses are incurred on an accrual basis, then the creditors or the obligations have to be presented on the liability side till they are paid by the entity. The third and the final linkage which we can establish are the retained earnings, which are retained after appropriations. Classic example of appropriations can be dividends. Such a retained earnings is presented on the liability side under the name heading equity or shareholders fund. To the share capital, if the retained earnings are added, this put together is called as shareholders equity. So the retained earnings and the shareholders equity can be linked, should be linked to understand the performance and the growth of the business over a time period of time, or to understand the trends. I hope you've liked this video. If you've liked this video, please do comment, like and share with others who can get benefited. Please do let us know from your comments. Let us know from the comment section as to what are the topics which you would like us to cover in the coming series. We would visit you back in Y series video number 3 on another interesting topic. Thank you.